In this video, I will give you an update on the latest developments on Indemo, a regulated platform from Latvia that offers very solid annual yields of at least 15%. Today, I won't be covering the basics as I've done it in a previous video. If you're wondering how Indemo works and how you can earn money on the platform, watch this video right here. So I recently spoke with the CEO about the current developments and changes that Indemo investors should be informed about. We have also addressed the questions from our community, so if you are already invested in the platform or plan to do so in the future, this video is for you. So first, let's talk some numbers. Since I last spoke to a CEO in September 2024, the platform has increased assets under management from 4 to 18 million euro. Indemo has repaid 13 debts, yielding an average annual yield of 23%. The return on investment so far has been pretty remarkable, and it's well ahead of what most platforms in the industry can match. It's worth noting that the average recovery time for a discounted debt on Indemo is 2 years. This can of course be shorter or longer. Currently, investors don't have a secondary market available, so liquidity remains limited. At the moment, the company is managing around 150 debts. Indemo continues to grow. The team has more than 20 members, and the investor community has grown to over 15,000 investors. With the pretty impressive growth, investors are naturally interested in whether the achieved minimum returns of 15% per year are actually sustainable and what would happen if the debt cannot be sold at a profit. We have had a question from a community member, and he was wondering, in case there is a property which, for some reason the evaluation was not correct, or you can just not sell it at a reasonable price and you will need to go into loss. What is the scenario in this case? How long would you be willing to hold on to that project? And at what point would you decide, okay, we will sell it?
Good question. First of all, due diligence, which is made by our debt supply partners, is quite rigid. From the statistics, just around 5-10% of the debts which come to as a stock to their table for consideration, only 5-10% gets really being bought and then listed on Indemo. We use external evaluators. There is in-house expertise, so there is in-house validator who double checks what the external one provided, and last one is definitely Idealista, so big data tool which gathers all data from the market. So there is key 3 points to make sure that valuation of the property should be fair. So the risk that the valuation is completely, crazy, well, it's probably this risk is very, very low, as we are working with residential properties, not with development construction things, then also valuation could be quite precise. The second thing is definitely that the real estate prices in Spain are growing year over the year in the last 5 years, and last two years the growth was quite good. The prices of the real estates, also what we see from the closed deals, they are completely different. They increased 5, 10, even 20% more. We also should not to forget that investors on Indemo, they invest at the market discount. The average discount is around 30-35%, which also allows to suffer even the market fluctuations if the market goes down. The key investor document, it's a main document which is available on the website, which gives the rules how return for the Indemo product, discounted debts product, is set. Then also there is 4 scenarios, and one of them is adverse scenario. And under the adverse scenario, it says that real estate price was dropped by 15%. Even in that case, investor could gain up to 6% return.
So in your opinion, it's unlikely that we would see some losses for investors in the near future based on the recent market developments?
Well, I would say it's the risk is very low. What we could see, it's risk of timing, because we deal with external recovery process. There is several stakeholders involved, which in some cases it's impossible to influence them. So if the case takes longer, it's not expected target term of 2 years, it's 3, maybe in some cases 4 years, then the return might be 1 digital, so 5-6%. But I would say the risk that we see the capital loss is really unlikely with the things I just mentioned.
Do you have a maximum time that is acceptable for you to hold the real estate?
So for these, they have a worst case scenario which is through the expertise of the legal firm, who are experts in the recovery, judicial recovery. They said that the worst case scenario is around 5 years, and this timing definitely will dilute the return, slightly decreasing it and giving one digit return. But as I told, like, to see the capital loss, it's really unlikely.
So the company may hold debts up to 5 years. Additionally, based on prognosed adverse scenario, the return can drop to 6%, and in the worst case scenario as described in the key information document, you may lose 6.6%. Again, I would take those assumptions with a grain of salt. You should note that there is no guarantee of return in BTP lending, and that total loss of funds can occur as mentioned in various disclaimers. Last year, we have also touched on the topic of a secondary market. This feature has been postponed to the first half of 2026 due to regulatory requirements.
So it's slightly delayed, definitely, according to our initial plans, but it was like grounded by the objective factors. So main hold on to move to the secondary market was shifting to the one node, one debt. The concept of secondary market will be based on the ability for investors to invest on the early stage, sell on the later stage. Without adding one node, one debt setup, it was impossible basically to start moving in that direction. We're working for almost 15 months with the Central Bank of Latvia. So in August, like a couple of months ago, we got the approval. Now in November, December, we will be working on the product launch roadmap, basically planning, setting the resources, and as we get to the start of the next year, the active coding operations and back office works will start, and the secondary market will be launched in the first half of next year, so before the summer.
During our discussion, we also touched on two topics, the relatively high cashback bonuses and the auto invest functionality. If you're following Indemo, you may have noticed that the company offers very high bonuses for new and existing investors to motivate them to increase their investment amounts. Until the end of November, you can get up to 5.5% bonus, which you can reinvest if you sign up with our link on PTP Empire. Existing investors can receive a 5% bonus by simply increasing their investment amount. The CEO shared with me that the bonuses won't be here forever. A secondary reason to offer those bonuses was to compensate investors for the lack of a secondary market. As soon as this feature is launched, bonuses will likely decrease. If you're familiar with Indemo, you may have noticed that the auto invest feature may not be available to you, as this depends on the answers you have submitted in Indemo's suitability test. The CEO confirmed that a revamp of the auto invest is planned as soon as the new one node, one debt update is released. Additionally, they plan to educate investors so they can check the right answers to enable the new feature. The one node, one debt update, which is now available, changes a few things in your dashboard. You will not be investing in a basket of debts within a single node. Each node will include a single debt. The platform claims that it will improve the user experience with a more transparent overview and new filter options. These are useful because you can better control liquidity and returns for each investment. For example, you can only filter debts in later stages, so the debt will likely be sold earlier than debts in earlier stages. Additionally, early stage debts are likely to provide you with a higher return on investment at the expense of lower liquidity. Additionally, the platform introduced an update to the legal flowcharts, giving you even more insights into the recovery stage of the debts you are invested in. For a full breakdown of the new features, you can watch this video from David on Indemo's YouTube channel. For most investors, the one node, one debt system will mean that they need to pay more attention to diversifying their investments, as in the old system where their funds were spread across multiple assets within one node. The one node, one debt system will primarily serve the secondary market feature, which will go live sometime next year. During the interview, the CEO mentioned that while the secondary market will mainly serve the one node, one debt system, older investors under the old node system will still be able to sell their assets, so we'll need to wait and see what type of solution will be offered at the launch of this feature. Apart from the product updates, we also briefly discussed the launch of the mortgage-backed loans, which have been teased now for over a year. The CEO mentioned that they could offer this product with a 7 to 8% yield, which he thinks won't be too appealing for investors at the moment. He mentioned that it won't likely be added before the launch of the secondary market, so not before the summer of 2026. Last but not least, we also discussed the scenario about what would happen if Russia were to expand its war to the Baltic. I got a question from a community member who would like to significantly increase his portfolio. However, his concern is the geopolitical situation currently in Europe. The war in Ukraine has affected a lot of Europeans and investors. And the main question was In this scenario where the war would expand to the Baltics, what would happen to Indemo, to the investments, to the infrastructure, to the operations? Can you perhaps share your scenario of how this could unfold for investors?
Yeah, sure. So yeah, definitely our team and I hope other community and broader communities stays positive on that development, or in Ukraine should go to the end in the coming close time, I hope. We are licensed market player MiFID investment firms, and we have a list of contingency plans and other things. And also on the strategical development, we also discuss this topic with our co-founders board. Practically, then we are better prepared for this occasion because the investors' capital invested in discounted debts, it doesn't stay in Baltics, in Latvia for a long time. So we settle weekly with our cooperation partner. So basically the invested capital transfer is being transferred to the Spain weekly. So it's just uninvested balances we have, but they're not significant ones. So the capital, the supply, the product itself, it's in Spain. And Spain most likely is the most farthest geography from the Eastern Europe in Europe. The other thing is that we are also discussed this topic with the Central Bank of Latvia. If we look into the infrastructural part of the Indemo, we have Indemo is based on the cloud services, so we could work and the platform could work from any part of the world. Also the bank accounts we have, one is in Latvia, other one is LTV Estonia, but LTV Bank is also considering they have as a UK bank. So we spoke with them, they could switch to the other banks if, I don't know, something goes very, very hot. It could be also the measure to decrease the risk. Then also currently the Indemo team, we are situated in different geographical locations. Some part of operations are present here in Riga, some part in Germany, some part in Spain. So I would say the open question would be, are there the plan B of Latvian state if shit hits the fan? So it's something that we are discussing with the Central Bank of Latvia. So most probably in the EU, there should be the mechanism, even the black X hour comes, that the MiFID license, bank license, which is issued in one EU member state according to the common standards, common regulations in EU, could be transferred freely to other member state which is not impacted by martial law.
Investors still need to access the platform, right? The main operations, the headquarters are in Latvia. So in the case of the worst case scenario where there is a military conflict and investors will, the team will probably not be able to operate from your offices, right? Do you have any contingency plan of how that would evolve?
Yeah. As I told that we are currently building more self-confident team in Barcelona in Spain. So one of the next stages it could be that there is a contingency plan to switch to the Barcelona office if this happens. But all in all, as I told, technical infrastructure. It will be working, but operationally, it might be slight delay, but we will be looking in that direction that we have a covering team, or at least minimal covering team in Barcelona to cover if Riga is down for some while.
As you can see, some resources have been spent on contingency plans for money transactions, operations, and regulatory sufficiency. I believe the most safe aspect of Indemo is that its investments are made in Spain, not in the Baltics. In a scenario where you would invest in Baltic real estate loans, for example, the situation would have been likely very different. At the same time, personally, I don't think most platforms have been stress tested for this scenario, so I would not be 100% confident that a platform could actually operate normally during wartime. That's why it's crucial to diversify across regions, not only in the P2P lending industry, but also across other asset classes such as real estate and stocks. That way you can always mitigate the impact of negative scenarios, as they will probably not affect all your investments. So to wrap this up, Indemo is currently offering attractive opportunities, especially for investors with no exposure to discounted debts in Spain. Of course, you should not rely solely on promises of high yields and dump all your money into the platform. Diversification across reasonable investment opportunities remains the best risk management tool. For more information about Indemo, please visit our Indemo review on P2P Empire, where you can watch the entire interview with the CEO. If you found this video helpful, hit the like button and subscribe to not miss out on future updates. Thanks for watching, and I will catch you in the next one.